There's no taking away the fact that hybrid funds, and not including the arbitrage funds, they're a separate category. But the hybrid funds that sort of, play around with the exposure in equity and debt are a great sell from an AMC and a distributor standpoint. But honestly, how good are they from your standpoint? Hey guys, welcome to another episode of 3 Minutes to Fin brought to you by One Tree Hill. Let's try and peel off a few layers of this category of funds and see if there are any benefits, if any. One, these funds typically have 60% in equity and 40% in debt. If we were to invest in equity and the debt schemes separately within the same AMC, you will almost always find that this investment process is cheaper in terms of the total expense ratio than buying the hybrid fund. This is especially compounded in an equity savings fund, which a lot of people put money in thinking it's safe, but for the return, the expense as a percentage is quite high. Two, like all our fingers, no two AMCs are the same. Over time, multiple AMCs develop niches where they get great at equity, some get great at debt, and hence the question is, why should I get tied to the same AMC in a hybrid fund? I might actually think that A excels at equity, B excels as debt. Let me give 65 to A, 35 to B, and get the benefit of both rather than 100% to either. And you can always optimize in costs out here as well. 3, a hybrid fund can invest in equities across large, mid, small. It can invest in any maturity when it comes to debt. It's like they've been given a free hand to do whatever they feel like and change their mind with the seasons as they come and go. So do you actually have a handle on what you're buying and selling, or where your risk will come from in the future? And that is a very important question to ask. What am I holding at the end of the day? 4, hedging through futures, taking put options are some of the tools used by what the balanced advantage fund does, right? To obviously give us the advantage. Now for this added complexity, is there a significant advantage between maybe a balanced advantage and the other hybrids? Or if you break it down into sum of parts? The answer is yes and no. Definitely over a short period of time, these can diverge, as maybe we are seeing currently in the situation that we are in. However, over a long period of time, the returns between all these hybrid funds are more or less similar because they're taking 60% in equity and 40% in debt on an average. Now that we've condemned these funds for all eternity, it would be definitely incorrect on our part to paint all of them with the same brush, right? There are definitely a few balanced advantage funds that have truly differentiated strategies and have worked well during different market cycles. If you can identify those funds, believe in those philosophies, it will no doubt benefit your portfolio. That's it. Don't forget to subscribe.